So I showed you my market monitor dashboard. The next thing I want to show you is my actual the layout of my main tab on TC2000. This is where I show my positions. These are the two that I traded today, as I indicated in my feed today. These are maybe some flag symbols that I might be watching. But I wanted to go over kind of my chart layout and why I have certain things on the chart, why I have things arranged a certain way, and just kind of go through my thought process behind the way I have my charts laid out. So I mainly have the daily chart on the left side, and I have an intraday chart on the right side. So sometimes on this side I'll tab between the daily or the weekly just to kind of get a big picture perspective. And then on the daily side or the intraday side, usually the hour and the 30-minute are the main two time frames that I use. Every now and then the 15-minute I'll use. Very, very rarely do I dip down into the 1 and 5 minutes. That gets extremely visually noisy, and I don't have time to be sitting there monitoring 1 and 5 minute bars. That's way too in the weeds for me personally. So on the daily, I've got the 10, 20, and the 50, the kind of the standard moving averages. I use the exponential. Some people like the simple or the front weighted or whatever. I don't think it really matters. They're not lines in the sand. They're more like reference points for me. So whether it's the 20 or the 21 or the exponential versus the simple, I don't care. It doesn't really matter to me. I just use the exponential because, they kind of update a little quicker, and I think they smooth out a little faster to price action. And then on the intraday chart, I have I also have the 10 and the 20 for the hourly, but I also have the 65 and the 130, which those correspond with the 10 and the 20 on the daily. So if you do the math and the conversion on the hourly time frame, the 65 and the 130 translates to the 10 and the 20. So on my intraday chart, without even looking at the daily chart, I know where the reference points are for the 10 and the 20 period moving average. In addition to that, I have the Bollinger Bands. As I have discussed many times in my posts, the Bollinger Bands helps me visualize volatility. So for me, that's extremely important because a lot of what I do is based on volatility contractions and expansions. So I am always aware of whether these bands are expanding or contracting, because that indicates to me if opportunities are present or coming up. I also use them as reference points for breakouts. So I have alerts when it breaks through the upper band, when certain patterns are forming. That will alert me to pay attention. In the past, I've also used the lower Bollinger Band as a trailing stop. There's pros and cons to that, so I can go over that at some other point, but there's a lot of utility to the Bollinger Bands outside of just showing volatility. It's a very powerful tool, in my opinion. I use it a lot. Same thing with ADX. I've mentioned ADX quite a bit. A couple of my main strategies are based on some ADX setups. And Dr. Schaap, he wrote 80 Excellence, I think back in 2006. So long before I learned about Kulamagi, I was following ADX as kind of like my main momentum and trend sort of indicator. It's got its limitations, like all indicators do. It's not perfect, but I have it colored to where it's kind of like a red and green sort of stop and go color, along with the ADX line. So this really is a good visual tool for me to help me understand trend, volatility, momentum, divergences that might be there between the price and the indicator. So there's a lot of value in this indicator. It's a multi-dimensional indicator, and if you want to learn more about it, you can try to pick up his book, 80 Excellence. But his settings are 13.8, so 13 for the DIs, 8 for the ADX. I don't know the math behind that. He's a doctor, maybe he did some research or something. I don't know, but those were the numbers that he used for his book. I've been using them ever since I've learned his method, and I've never seen a reason to change them. You could probably go down rabbit hole of like optimizing these things, but it'll be like optimizing any other indicator. There's severe limitations to that and trade-offs. So I've always stuck with 13.8, and the 25 reference line that he talks about in his book is also a very, very good reference point for understanding, is it the bulls or the bears that have kind of domination of the price action at that point in time. So that's ADX. Another powerful thing about TC2000 that I really like, in addition to the scanning, is you can color the bars on the chart. So if I open this up, I have a couple of conditional colors on the chart, so it's important for me visually to be able to see areas of contraction and areas of expansion. And as I've said, my platform is set up in such a way that I'm trying to be as efficient as possible. That's my main goal, is I want to be able to make judgments and decisions within a matter of seconds. So if I'm sitting there having to like count bars and like do all this calculation, mental calculation before I put on a trade, it's just that doesn't work for me. So I have just about everything structured to where I'm not like a mechanical trader, and I'm not automated, but I have a lot of my processes that are automated, so that way and when I'm in the heat of the moment, I'm not sitting here having to think about these things. So I put a lot of thought and attention into like the formulas that I use and why I use them, and I've gone back and forth, and I've made so many formulas over the years, formulas of formulas. It's just maybe the engineer in me, but so these are my current settings. Like I have something that's indicating to me a lower than average size bar, and I've got a formula that's indicating a higher than average size bar. And I only care about the up bars, so I have an extra piece in here talking about it being up for the day. This could be 1.01, be like 1% up. I just have it 2%. It doesn't really matter. It's more of a visual reference. So if I can open that. If you want to pause and look at the formula and study it more, then feel free to. And this one you can clearly see. Alright, so in addition to that, I have the float. I have the daily dollar volume. The liquidity is important in so much as, depending on your account size and the size of the position you're trying to get, you need to have a sufficient amount of volume, liquidity to get your position without disrupting the price. Christian Kulamagi, he has a rule of thumb, 1 or 2% of the daily dollar volume. He didn't want to exceed that. So I think it's a really great rule of thumb. So it's easy to kind of calculate based on the daily dollar volume and how much position size you're trying to get. So, if we're talking about 1 or 2%, if I'm trying to get let's say a $20,000 position, if I divide that by 1%, that's about 2 million daily dollar volume at a minimum. Obviously you want to have liquidity, plenty of liquidity. So you just take your position size that you're trying to get, divide it by 0.01, and that'll be your daily dollar volume minimum. Now, if you have a really small account and you're just buying a couple hundred shares or something, you're not going to want to trade some super thin stock that only has like a tiny daily dollar volume. So I would have some minimum threshold of maybe a couple million. Otherwise, you're like, I trade some dumpster stocks sometimes, but like if you go lower than a couple million, you're trading some super sketch stuff, and that's kind of on you. And then ADR percent, that's super important to me. I'm a really big fan of Kulamagi. I follow a lot of what he does, and he really got me on the concept of trading very high ADR stocks. So this, in addition to volatility as a function of compression and expansion, trading things that are extremely volatile has been kind of a centerpiece of what I've done in the last few years. There's trade-offs to that. Obviously, these stocks that are super volatile, they have their own risks. But if I'm looking at trading a 16% ADR stock versus a 2% ADR stock, in my mind, there's no question The main trade-off in my mind is the lower the ADR is, and this is a rabbit hole in itself, but if you trade something with 1 or 2% ADR, you're going to get an extremely tight stop, which means you're going to be using significantly large portions of your account for one single trade. Me, I'd rather be on the other end of the spectrum where I'm able to take more and more trades, even though they're smaller, but I'm going to get the same kind of impact as if I were taking that same trade on the lower ADR into the spectrum, but had to take, use a third of my account or 50% of my account for that one position, if that makes sense. So ADR is important to me. I have a couple of, earnings for the calendar year, next year, revenues. I don't look at fundamentals too deeply. I mean, if I have a stock that meets my volatility and momentum criteria, and I also see that it has decent fundamentals, that just adds another, quiver to the to the arrow. So it helps. It helps me just kind of understand. I don't necessarily care about fundamentals, but other people do. So that might increase the demand, and the institutional interest and things like that that might be there. So if you see a low float stock like this that has an insane amount of volume and volatility, and it also has decent fundamentals, like these tend to be decent stocks that can be traded multiple times because they have some fuel behind them. Versus maybe something that's more speculative. It might be just some news announcement. It might pop for a couple days and then it just disappears back into the hell where it came from. So like I don't look at fundamentals super deep, but this is another thing that I just add to there just to understand it. And then the last thing is earnings date. That's another important thing that has caught me a few times in the early part of my trading, and would end up kind of bad. So this is something I definitely pay attention to, not because I care about the earnings itself, but I just want to, for risk reduction, not be caught heading into an earnings event with a decently sized position. So that's my daily chart, my intraday chart, and some of the different parameters and functions on there. And then on this side here, the other good thing about TC2000 is you can put a lot of filters in your columns. So, one thing that's important to me, I have something called tradable. So basically what this tells me is just a quick indication of, based on the current price minus the low, is it less than the average range of that stock? Because that's another Kulamagi rule of thumb, is like he doesn't want to trade stocks if his stop would be greater than the ADR of that stock, the average daily range. So it's just a rule of thumb. Like so if something pops into my screen and it's missing this check mark, that means it's already like way far above and beyond its normal, like the risk reward ratio is kind of out of whack at that point. That doesn't mean I'm necessarily going to like not trade it, because like in this case of some sort of gap and some sort of large move, of course it's going to be greater than its ADR in most cases. But like if it's not a gap, then I definitely want to see that it hasn't expanded so far for the day greater than its ADR. And then the other one here, that looks like the same formula. I don't know why I have that twice. This is the ADR formula that I use. I've seen variations of the ADR formula. I think the one Christian showed on his stream was like the same. It was a similar version of this, but it was like all the way broken out. But TC2000 has a way where you can kind of condense the formula, so you don't have to break out every single iteration of it. So this is a version of it. I've seen versions of this where it doesn't have it divided by the close. It has it, I think, minus 100 or something, or minus 1. I don't remember the exact formula. The reason I divide it by the close is because it actually smooths out the result. Because the higher the volatility is, the wider this range is going to get from high to low, and it's going to like actually skew it in such a way that where it actually isn't necessarily correct. So dividing it by the close actually like smooths that out a bit. It's a bit math heavy. I'm not going to get into that in this video, but I just use my version might be slightly different than others to some degree, but only on the very, very, very high ADR stocks. Once you get down to like 6, 7, 8% or less, like the difference becomes a lot more minor. And I may actually have a version of that where it has all three broken out. Maybe not. Anyway, okay. So that's the ADR. Again, you can use this formula. Kulamagi has one. Dr. Manzi has another one that she shows in her videos, which I think is an easy one to use. So at the end of the day, it in my opinion, it's not it's not that critical of a deal. ADR is important, but the specific value in my mind is not that super critical as long as it's sufficiently high. And then the Bollinger Band width, this is just a standard Bollinger Band width, so I just basically took, the 30-minute Bollinger Band width, just the standard formula, and I just have that displayed. So essentially what I'm able to do with these columns, if I have these two next to each other, I have the average daily range, and right next to it I have the intraday Bollinger Band width. And I've gone over this in my feed quite a bit as well. It's like, if this average daily range number is smaller than the intraday range, that means the intraday range is already significantly expanded, and that's not offering me a good risk-reward sort of situation. Whereas, here, the average daily range is 15%, and the intraday range is right now is at 7%. So if I go over here to this chart, this range here is significantly smaller than its average daily range. So like this, in my mind, is a situation where if it has the right formation, the right flag pattern, the compression that I'm looking for, this is what I want to see before I hit the buy button. Like, if this thing were to break out to the north side here, and at the same time it's breaking out of a contraction area, that's what I'm looking for. Whereas INBS today, because it gapped, that something gapping throws that dynamic off, because it was very tight before the gap, and then once it gapped, you can see that this Bollinger Band just kind of goes crazy and expands really strongly. And as I said before, I'm trying to get out of the habit of trying to buy things at the open. So like today, I waited past the open. You can see the open was a little sloppy, so people that kind of got in the first 5 minutes, they probably got chopped out at the lows. They might have re-entered again at the highs, and then probably got stopped out again. So it's like, the opening part of a session can be extremely sloppy sometimes. So today, I was patient. I waited for an alternate setup after the open. I didn't get in right off this pivot here, but I got a decent entry. And my stop, I was able to get a decent stop on it. And then it chopped around for a bit. I missed this add point. This was actually a really nice looking flag here. Even if I put on the 30-minute chart, you can see how it compressed really nicely. The bar is turned white, which means it's compressing relative to its average. And then you can see this expansion breakout bar here. Unfortunately, I'm a working professional, so I wasn't there when it did that. So, I bought my position, I set my stop, and then I go and do other things. And, when I came back, this thing had already broken out, so then I just kind of moved my stop up. And since I wanted to enter the weekend flat, I ended up selling this thing up here completely, and then, it retraced for the rest of the afternoon. So yeah, that's important for me to see these two numbers next to each other, because this really helps me make decisions very quickly on whether the trade is tradable or not. So I have these things situated in such a way. Oh, there's the tradable right there. And the next, volume buzz, is also critical to me. Just about every screen that I have, I either have things sorted by volume buzz or I have things sorted by ADR. Like in a vast majority of cases, those are the two columns that I'm sorting by, because those are the things in my mind that make the most difference for me. Obviously, I want to trade the things that are having the highest, strongest volume buzz. If something's breaking out and the volume buzz, let's say it's like negative 53, it's like just kind of limping along. It's like, okay, I'm not going to have as much conviction about that as if something were breaking out stronger than that. And that's not always foolproof. Like I took DWAC this morning, and when I bought it, it looked nice. It was coming out of this compression pattern. The volume was, I think, I don't know, it was 250% at the time when I bought it. So everything looked fine at the buy point, but then it just kind of fizzled out and just didn't follow through, and it rolled over and died. So it's just a normal stop out that happens. So yeah, this essentially is my trading screen. I have the daily with some moving averages and the ADX, and I have some color bars in there. I have some information to help me determine float and volatility and liquidity, some basic things related to fundamentals and earnings data and things like that. Those are the main things that are on these two charts here. And then I have some columns here to kind of help me make some decisions on whether it's tradable. What is the ADR versus the intraday Bollinger Band width? I want to look at the volume buzz. I have some other things here for the sector and the industry and things like that. There's probably more columns here, but those things I don't really care about too much. So yeah, that's my main. This is my main pay tab here that I use to kind of track my positions and track anything that might be coming through the scans. So yeah, reach out if you have any questions. I'll try to give you an answer if I have time to answer. But yeah, that's my trading platform, and that's how I do business. Thanks.